The European currency gained value in early trade on Tuesday despite an empty macroeconomic calendar. Ahead of key US data, bulls attempted to push the price to its one-month high. However, the euro failed to reach a new peak and came back under pressure. Meanwhile, the British pound hit a fresh one-month high but then reversed to the downside and resumed weakness as part of a correction, weighed down by US statistics. Data show that US consumer confidence unexpectedly improved for the first time in 4 months. The index rose to 102 in May from 97 in April. Against this backdrop, demand for the dollar increased and the riskier assets went down. Nevertheless, their mid-term uptrend remained intact despite a recovery in the greenback. Now let's take a look at today's macroeconomic calendar. It includes data on the Eurozone and free money supply, household lending, as well as German consumer sentiment. The focus of market participants will be on inflation in Germany. The Consumer Price Index is expected to come in at 0.2% in May, down from 0.5% in the previous month. Annual inflation is anticipated to accelerate to 2.4%, prompting the European Central Bank to take action, but cautiously. Traders may also take notice of Germany's harmonized inflation rate. Later in the day, the United States will release the Richmond Fed's Composite Manufacturing Index and the Fed's survey known as the Bain Book. These reports are likely to have a strong impact on market sentiment. From a technical perspective, the 1-hour EUR USD chart shows that it is worth focusing on the 1.0865-0842 range. A false breakout at 0842 will generate a buy signal, pushing the euro back to 1.0865. If the price breaks above this level and tests it from the top down, the volume on long positions will increase further, with the European currency climbing to 1.0888 and probably hitting a new high at around 1.0918. However, this scenario is unlikely at the end of the month. In this area, I recommend going short on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.0865 can be considered on a false breakout. Alternatively, if the price breaks through and fixes below 0842, the euro will dip to 0820 and possibly 1.0796. At this mark, it will be wise to go long on a rebound, expecting a 20-25 pip move. Going long at 1.0820 and 0842 will only be relevant in the event of a false breakout. Speaking of the British currency still in a bullish trend. If sterling slides, I recommend going long at around 1.2720 amid a false breakout. In a bull case scenario, if the price breaches 1.2761 and tested from the top down, another buy signal will be generated, with the pound-dollar pair rising to 1.2797 and probably 1.2853. At the level of 28.53, traders are recommended to go short on the rebound, counting on a 30-35 pip move. Short positions at 1.2797 and 27.61 can be opened at a false breakout. In this case, the 1.2720 mark can be seen as a target. If the price breaks below this level, sterling is likely to dive to 1.2677, where it would be wise to go long on a rebound to catch an intraday correction of 35-40 pips. Best of luck.